Sorry. Everybody can hear me? Good. Okay, good. All right, so tonight there's classes going on, so we're not going to have a big class, but we'll definitely still talk about some deals that were sent to me. Might be a little bit shorter meeting, no big deal. We'll run as long as it needs to answer all our questions. Also wanted to talk a little bit about marketing to your Power Team members and how we can build those relationships. So right now I have the one from Jean. I got your, I guess this is the laundromat, yes? Okay. So Jean, okay, any questions? You can start typing in. I'm just going to look at this deal. I just want to make sure I have the right deal here. So what's the purchase price on this, Jean? 100K. Okay. So I was looking at the right one. Okay. All right. So let's do that. There we go. All right. So we'll look at this, and you can break it down for us. Explain what it is and some of the numbers, because obviously we'll be looking at it in a different way. She's open to negotiate. Okay. So 100K, 15 for repairs. That's to get, I guess you have a hard number on the 15K. That's what's needed. And this produces $10,000 a month in gross income. Is that right? And these expenses that you've established, you've put the actual expenses from it. You still have vacancy maintenance and management as values. Is there a reason that you have those values there still? Okay, let's do that first. We need to make that 0 so this value comes up. And the vacancy maintenance and property management are coming up for numbers. I assume those are all 0, right? There should be 0. You didn't touch this? You put these in though, right? These are yours, right? Okay, so really that's the number, right? 102 is the number, right? Okay. Okay. So you see that the gross rent multiplier is this looks amazing, right? So it looks like it's amazing, but your cap rate is 15.5, but the big killer here is the expenses, right? That's what's deadly here. When we finance this, and you got 0 for financing, does that mean the seller's putting up 80,000 at 6%, you're putting up 20 grand, yes? Okay. So currently this thing looks like it'll lose about $50 a month. And the reason, the big reason is one of them is the financing. So if you were like financing at 3, it would make $50, but still, you have it at 6 because they're going to finance it. The dilemma here is the property, the unit itself doesn't make a whole lot of money. Even if the financing was 0 and you were putting in your own money in there to buy the whole thing, looks like the cash flow would be around $2K a month. So, sorry, $155 a month. So the dilemma with this deal here is the expenses. Okay. So we look at some big ones here. Salary is a big one. Gas and electricity you need, obviously. Insurance you need. Security. Miscellaneous cost. Okay, so the looks like, give me 1 second. Yeah, I mean, are you putting yourself in as a salary, part of the salary? Is this salary without you being there? So those salaries don't include you, right? No, you're there earning a salary. You're not there. So if you're not there and they're financing it at 6, you're going to lose money, right? If you just joined us, this is a business that Jean is looking at. It's a laundromat. Seller wants to sell it at 100,000. Financing VTB at 6%. The VTB is nice, but the 6% at 80,000 wipes out any profit left after expenses. These expenses include salaries, which John is not included on, so the salaries are 61,000 a year. That's to run it all the time, correct? How do we make this work? How do we make this work? Even if it was 0. Yeah, this is this doesn't look like it can work. And more cash machines on site. It already runs nicely, but the owner stopped taking care of it a few years ago to turn on to bigger operations. How can you get more revenue, Jean, with more machines? Promos for clinics nearby. Another business. Huh. Well, right now you're basically looking at break even. But if you're talking about, and that's repairs, the 15,000 not included because that's not financed. So it'll be 15,000 plus, another, looks like $1,000. You'd be out 16,000. Okay, so what I would say, Jean, is this is not a functioning business. So this is not, and when I say functioning in the sense of profitability. So you said the person's not running it anymore, right? Do they not want it anymore? Why are they selling? Not yet. Other laundromat 3 times the size, so they're working on a laundromat that's making them more money. They just forgot about this one. Is that right? Okay, what happened? Why is it not making money? She altered more revenue. Started. So she started another laundromat that's making more money and she forgot about this one, correct? Okay, and how much do you think you can increase the revenue by? 5%. Okay. If you increase the revenue by 5%, you'd still be only making about a 500 maybe. You said that she was open to negotiation, right? Well, I think for this, John, the reason I asked how much can you make in the first year is I think this is a good example of an opportunity to get an option to purchase. So basically, you're going to lease option it, or you're just going to option to purchase. That's all. And the idea is that you sign an agreement and you tell her your intentions. Look, I want to do this, but I want to see how much I can do because currently this thing won't make any money. So what I'm going to do is we're going to draw up an option agreement that allows me the option but not the obligation to purchase this laundromat in 1 year. For the price of $100,000. And what I'm going to do is the next 12 months, I'm going to work on this and see if I can increase the revenue. So the option agreement is $1. We just say, it's $1. What I'm doing is basically taking care of this business for you, so you don't have to worry about any of the bills and everything. I'm going to take over. I'm going to transition, take over the business, and this gives me the right but not the obligation to buy this business in a year for $100,000. I'm just trying to see if this works for me. But currently, this thing doesn't make any money, and the reason that I'm interested in it is I think if it's given attention, I can make it profitable. Does that make sense, John? So what you're doing is you're giving her offer price. You're saying, look, I'll pay you the $100,000, right? But at $100,000, it basically doesn't make any money. I think I can make it profitable over the next 12 months. So I'm gonna take over the business. You're not gonna pay me a salary or anything. I don't make any money. I'm not making any money unless I bring new business in. But currently, the thing loses, $663 for the year. Loses money. But the reason that it loses money, John, is the financing. Okay, so if we make the financing zero, right, it makes $155 a month is what it makes. Okay, so what you're saying to her is, I'll take over the business. It pretty much breaks even. And I will work on the business for a year. And if I can make it profitable, then great. If I can't, then obviously I can't take the business over. Does that make sense, John? But you don't want to go into this without some kind of agreement in place, because if you do make it successful, you have no protection for compensation because you're not taking a salary, right? You're not taking any salary, and you tell her, I'm willing to pay you what you want. I'm willing to do the VTB at 80,000 at 6%. I'm willing to, So basically, she gets you for free, working for free for a year. And if you can make it work, then great. If you can't, though, there's no obligation. You don't have to buy it. I think that's a fair arrangement between you and the seller. Otherwise, you can say to her, otherwise, I'd have to get it for, say, 80,000. Oops. 80,000, say. And even that's no. I think the only way this works, John, seriously, to protect yourself and your investment, is you got to be willing to do an option agreement, because I'm telling you, this thing, based on what you're showing me here, this thing doesn't make money, and that would be extremely dangerous to take this on, because the value of this, if you had to what's the liquidation value of this? I don't know. Like, is it 20,000? Is it 15,000? I'll tell you, I'll put money down. It's not 100,000. And when I say liquidation value, is if you had to get rid of all the machines and whatever value in there, if you had to liquidate it, what would it be worth? Because that's the rest of it you're buying is goodwill. So if the liquidation value is 20,000, you're paying 80,000 for goodwill, and the question becomes, is that worth it? Does everybody know what goodwill is, right? That's basically the goodwill, the business that they built up, the reputation, the brand, all that is goodwill. So this particular business, unlike, say, a property, which people need 100%, is something that people as a service use for sure. Can be very profitable for sure. But what are you paying for goodwill, John? What's the liquidation? If this was liquidated today, how much would you get? It might be, I don't know. I couldn't tell you. You could actually work that out. With the seller would know what the liquidation value is, or close to, because the rest of the money. So if the liquidation value was 20, you'd be paying 80,000. 80,000 for goodwill, and I don't know if that's appropriate for this. I would say, give yourself some time, do the option agreement, and see if they'd be open to that. And basically, you'd be taking it over. Yeah, I mean, we have to consider it, right? So I would say, let me make this business profitable again. So let me do this with you. Agree to all your terms. Let's do an option agreement. I'll take care of the business. I'll spend 3 months with you to make sure that I understand the accounting end of it, or how it's managed, all the things that you need to, I need to know to be successful. And then I'll take the next 9 months to run the business, and I won't draw a salary. You're not going to pay me or anything, but I'm going to work on building the business. And if I build the business up in the next, 9 months, I'll be more than happy to pay that money. If I can't, obviously I would just give it back to you, but you would at least get someone that's paying attention to this business. Anybody have any thoughts on this? Okay, that's good. Anybody else? Any thoughts? Maybe you've been in something similar? No worries. Any questions by anybody? Comments? Does everybody understand what I'm proposing here? Okay. Okay. All right. Okay. Okay. So Jean, you can keep us updated on that as you move forward, and hopefully, it'll work out. But I would avoid any commitment to purchase, because there isn't a lot of money at the end of the month. Even if you paid cash for this, just to give you an idea. So, and it's going to be the cap rate, right? So basically, you make 17.9% on it if you paid cash for it. That would be no financing. This is not bad. 17.9 is not bad. any financing attached to this though would be a challenge. But you'd have to put up the 100K. And this here would be probably an area you want to attack to see if there's any opportunity there to reduce the expenses. Probably not much there. I don't know the business to tell you that. The rent is $22,200, huh? Is that in a plaza? Is it an own building? She owns it. Her husband. You know, you might wanna think about renegotiating after the option, deal is put together. I would maybe wait for that conversation. I would spend the time on, and you gotta ask yourself, John, how long do you want to spend on this? How many hours a week do you want to spend on this? Because you're not getting paid. You're building equity for yourself to be able to purchase a more successful business a year from now. And that's something you should keep in mind too, right? How many hours you're going to devote to it, because it might take you an extra 10 hours a week to learn how to do this and to run it and to work on building it up. And you're not really making anything substantial unless something substantial changes. Abdel, you have a deal you want to share? Yeah, think about it. Okay. Did you send it to me? Okay, good. Give me 1 second. There we go. Perfect. Okay. Excellent. Give me a sec. Right. Let's bring that up. Anybody have any questions? If you do, you can just type them in. I'll answer them as they come in. Okay, let's see what we got here. Okay. Okay, we're using an older sheet. Doesn't really matter. It's got pretty much the same metrics. Let's look at it. Okay. Okay, everybody see that? Give me 1 second. Here. Let me just move these numbers over. Okay. So, you want to tell us anything about this property? Anything that you think would be pertinent? Uh, 438. Okay, units 4. 3, good. Looks like expenses are, here, let's look at this. Let's put it in here. We'll make this a 0. And then what we'll do is we'll put in other, and we'll put in 5531. Okay. You have vacancy, maintenance, and property management at 10%. Is there a reason? Utilities paid by renters. That's good. Okay. Oh, why? I know why. Let's make this. Currently, you have this here. That should match now. Yeah. Okay. I think we're good to use this one now. Okay. So, let's go 20. We'll start there. Okay. She said no vacancies for the last. Okay. If there's no vacancies, there would still be management, right? Are you intending to manage it yourself? Is that the idea? You mean maintenance? Okay. Now I'm not sure for the management. Okay, so why don't we just leave these, because you have to have vacancy, because if you don't use it that year, you just put it aside, right? You put it in reserve. If you don't use maintenance this year, you put it in reserve. But you have to account for maintenance, right? So, and management. So let's leave it here for now as 20%, okay? But the exact expenses, the 5531, that's accurate, yes? Okay. Okay, good. All right, so this still works. Still works. Okay, so the cap rate's not 10, but it's 6.6, and the gross rent multiplier is, it's double digits, but it's right at 10, so we can still make this work, okay? So if we get a mortgage, it's a 4-unit, so it'd still be considered residential, okay? So we could get a regular mortgage with it, and say we get it at 3%, 350,000. We put up 20%. We'll just start there, okay? So this property works. It still works with putting in the right numbers. Okay? So it still works. But pretending, or not accounting, my apologies, not accounting for those numbers makes me nervous. Let me just check something real quick. I just want to see what you had here. Yeah, that's right. Okay. All right, so now if we could get, is she interested in a VTB at all? Any vendor financing available? See if we can get these numbers up a little bit. No, not now. So she's not interested in a VTB, right? Is that what you're saying? Would increase it. I have not suggested it yet. All right, do you have the capital to put in the down payment? Do you have the down payment? Do you have 87,600 for this? Okay. Okay, so the other option, so you're at 12.9 now and 236, okay? What might be good, if you're open to it, is to take on a partner, right? To put up the 87 or half the 87, or, something to reduce your investment in it. The idea is to increase your return. So you're at 12.9 now. If we could get this, 10 and 10, and we were paying 0 for this because we brought in a partner, your return would be 22.6%. The monthly cash flow, though, would be split, right? So the investor, they invest 43.8. Their monthly cash flow is 411 because there's 4 units. They make 10,000 in 24 months. If we did 60 months, and if we did, I mean, it would be extremely profitable for someone to partner up with this property with you. Put up half the cash, you put up half the cash, and you would make. And the real thing is the impact on you. Now remember something. Them putting up half the cash, I probably ask them to get the mortgage for you too, as another option. But if they're, if someone put up all the money, let's check something here. Oops, 20, 0, and I mean, even if someone put up all the money, it would be a good deal, for them. They would still make, let's go 24 months. I mean, they'd still make a killing they still make $8,000. So if we did $8,000 against their investment of 80, they'd be making around 10%. So if I put 10% in there, that's about right. Yeah, that's about right. They're making over 10% actually, a year on it. No, I just put 24 months in I was just looking at that. So if you could go, it doesn't really matter. If you go 12 months, it really affects the cash flow, obviously. So in 12 months, they make $1,137 because 94 months, because you're splitting that. No, actually, it's more than that. That's 0. They're making $4,211 is what they're making in 12 months from their investment. Now, this includes this purchase price, this resale value of $459. You could put anything you want. So if I change this to 24 months, it's going to take that number there. If I say 5 years, it's going to take that number there, right? It's looking at the profit, the additional profit, and the cash flow that they'll be making over those months. But per year, they'll be making $4,000, in cash flow. Okay, well, you can put this to anything. This is just an example. You could just make these all one if you wanted. I mean, it's still a good deal for a partner, because you found the property, you've structured the deal. They're putting up the capital. Now, if someone doesn't want to do that, that's fine. I mean, it doesn't have to be. You can keep this all for yourself. I mean, technically, you could put up to 20%, and you would make 12.9, which is a good return on an investment. You'll be making 236 times 4, so that's talking about $1,000 a month almost. So this is a pretty solid deal, based on what you've shared with me. Also, the expenses, we've allotted 5% for vacancy, 5% for maintenance. Even though she says no vacancy, we still got that. Maintenance, even though she's fixed everything up, we'll just keep putting that money aside every year. You just put it aside, put it aside every year. And management is 10%. That's also included in this expense. So you can, if you decide to manage it yourself, that's totally up to you. You'll make a little bit more money, but all you're gaining from managing it is an extra $4,300 a year. And if the time that you're putting in is low, then it would make sense. But if the time, just to give you an example, equals divided by 2,000. Yeah, so that's going to pay you on a 40, if you did a 40-hour week, $2.16. That's 2,000 hours. If you did it part-time at 1,000 hours, it would be $4. So 1,000 if you did, 500 hours of work, you'd be paid $8.64. Okay? If you did, 100 hours, it's 100 hours is second, is $43.20. She said she can actually travel for months and not worry about it because snow mowing and all of it is on the renters. Really? Well, that's pretty nice. she's never. She's never. It's in the lease. They take care of that. That's pretty sweet. She doesn't pay anybody to move the snow. That's that's pretty good. That's pretty good. I mean, I'm telling you, I'm looking at this property. I'm thinking this is really nice. I mean, it's a standard mortgage. You know, a standard deal. This thing is going to make you over 10%. So this looks like a great deal. And we haven't done it. We haven't really done too many things creatively. We've just been prudent in adding all the expenses. The one thing that I would, expect or look at is that there's some more expenses that are not accounted for here. Plus, she says the 700, 750 apartments can be increased easily. Well, it depends where they are. If they're in Alberta, which this is, correct? You can give notice. Yeah, you can give notice and increase the rent. That doesn't mean the market's going to let you do it, right? So, can you tell me why she's selling? She's turning 80. Wow. Okay, well, you might have won the lottery then, pal. So, can I ask you something? Do you have this under contract? Just in case you didn't hear me, I'm asking you, did you have it under contract? That the other thing, she wants to do it through her lawyer, not a realtor. Okay, you need to get it under contract immediately, like tomorrow. You need to get it under contract ASAP. Is that so? Get it under contract with the clauses that you need to verify income and expenses and all the numbers that she's given you. And yeah, you got the capital. There's not much stopping you from doing this other than, do I want a partner? Do I want a lender involved? This would be, on its own, it's a great deal. You could make it better if you included some people in it. That's totally up to you. But this step that you need to take right now is to get it under contract. ASAP. Can you guide me on how to get it on contract? So, yes, what you want to do, first time for me, no worries. This is what I want you to do. I want you to tell her that you want to put it under contract. And you said that she wants to go through her lawyer, yes? Yes, the split. Oh, you split okay, so this is what you do. Well, there you go. If the lawyer is going to be an expense, call her tomorrow and say, look, I really want to, move on this. Can you reach out to your lawyer? Well, you could reach out to him if you're splitting the fees. Can I talk to your lawyer about putting an offer to purchase agreement together? Talk to the lawyer, either her or you, and say, can you send me an offer to purchase contract? And then add the additional clauses, and then sign it and send it back. And then you got it under contract. Well, yeah, you can put that. You can get the inspection though in the contract, right? What you want to do is you want to get control of this. That's going to be in the contract. So talk to the lawyer about getting the property under contract like tomorrow. You want to do this tomorrow. Okay? Now before do you have your own attorney? Okay. So I can give you a name. If you want to use them, you're more than happy to use them. I can give you a name. What I'd like you to do is I'd like you to, once you get it under contract, once they send you a contract, I want you to send it to me, okay? And then we'll go from there, all right? But I really think this is something you want to move on tomorrow. Okay, let's get it under contract. Worst case scenario, the deal doesn't go through. You know, if we get it under contract. If we don't get it under contract, then we'll have a problem. I hope our lawyer knows to do contracts. Well, if they don't, your lawyer will. That's the main thing. This is something you want your lawyer involved in, okay? Especially because it's your first one. You want to make sure that you do it right and you don't put yourself in a bad way. So why don't you make that phone call tomorrow and talk to her and keep me updated and let me know when they send you a contract, okay? But let's get that done, ASAP. Yeah. No problem. You send me an email, I'll send you the lawyer, okay? Yeah, no worries. My pleasure. Good luck. This looks good. Looks really good. Yeah. Let's see if we can make this happen for you. That would be exciting. Anybody have any questions about this property? Anybody? No? We're good? You can see that the cap rate is 6.6, but we're still able to make it profitable. It's still profitable. The big reason is because the capital, obviously the capital, he's putting up the capital. That being said, if we had someone else putting up the capital, there'd be a threshold, right? So if I went 10, this wouldn't work, right? So I'd have to bring it down to maybe 8. Nope, still doesn't work. Because we're gonna go for 100. Okay, let's stick to 100. So it looks like 6.5. Yeah, like a 6.5. I could pay an investor 6.5, and I'd still make 100 a door. So this deal works basically. It's not just the financing. That's nice, and that he's putting up 20%. Because that really doesn't affect. At the end of the day, the return is the return based on what you put up. The real reason this is profitable is this right here. The fact that the expenses are $5,531 it's great. I mean, if that's the only expenses, which is insurance and taxes, correct? I insisted on making sure that those are the only expenses, and she said yes. Well, I mean, we'll do that through due diligence, but if that's the expenses, I mean, she's unlikely that she's deceiving you on purpose. Like most people are not deceiving people on purpose. It's usually by accident. Now, there are some people I'm sure out there that they spend energy doing that. But for the my experience is most people, overwhelming majority of people are good people. So I would take her at her word, and then obviously we have an inspection, and she has to produce an income and expense statement, from the property. That'll all be in the contract. Okay. So this is a great find. I hope it pans out. This would be an excellent first deal. And when you think about it, if we look at this, 1 second, 20. I mean, this is basically $1,000 a month. I mean, $1,000 a month in cash flow. That's an extra, 24 grand a month. Sorry, my apologies, 12,000 a year. That's a part-time job right there that you're buying. That's paying you. So that's a big deal. Yeah, it's a part-time job. You're making $1,000, and pretty much most if not all that money, you're going to get to keep. If you work with your accountant to run the numbers properly. So that's excellent. Great find. Okay, any comments on this? Anybody? Okay, well, good find. Yeah, that's a great question. How'd you find it? Just curiosity. Yeah, how'd you come across it? Was it somebody told you about it, or friend, family? Okay, I'll let you type while I talk to the group. Okay, so how about, let's see. I was a renter. I remember the lady telling me she was interested in selling the property 3 years ago. That's awesome. That's awesome. So I kept her contact. That's awesome. Wow. Wow, my friend. She said 500K 3 years ago, and now she's willing for 438. Wow. That's awesome. She offered 450, then said 430, then we met at 438. That's awesome. Wow. Well, good stuff. Get it under contract, okay? That's excellent. Okay, so for the rest of the group, I think that want to focus a little bit, last little time we have left, 10 minutes, talk about how to build relationships with your power teams and marketing yourself. So an example would be, your contractor, working with a contractor on him or her finding properties that are suited or fit with you. So contractors are a great source of opportunities. Contractors, if given the opportunity, would be able to buy, would love if they could buy the properties. What would be the advantage, you think, of, just talking about the contractors as an example, what would be the advantage of partnering up with a contractor? What are some of the ideas we have? Who could tell me some of the things that would be, might be a good arrangement for you and a contractor? Luck? Do someone you trust? So no, I want to. I'm talking about finding a contractor that you decide to do some real estate with, some deals. What would be the advantage for you, and what would be the advantage for him or her to do business with you? What's the advantages for the relationship? Knowledge in areas, good. Better costing, okay. It's a possibility. Anybody else? What would be the advantage? Splitting equity for workmanship. Yep. Okay. Clients, sure, yeah. They know if any repairs needed and how much it will cost. Yep. Manpower for turnarounds. Yep. Okay, so let me share something with you here. Um, so probably the biggest or one of the biggest advantages to developing relationships with anybody, but let's talk about contractors, is the contractor is willing to get paid at the end of the deal. Everybody get that? So I'd say number one, paid at the end, paid at the end. Okay, paid at the end. Okay, that's huge. Paid at the end. Okay. The second thing, everybody understands that, right? They get paid at the end. When sold or work completed. Yeah, when sold or refinances. He's an investor with you, right? So when it's sold or refinanced to get the money out, they get paid then. Okay? Now the question of them getting paid, I would suggest, and I'm not saying, I would suggest that the cost of the rehab, you want to get as close as you can to their actual rate. But the profit to be paid after. Does everybody understand what I just said? So if they charge $100 an hour, you don't necessarily want to say to them, well, let's give me everything at cost and your rate per hour is $50 an hour. Why don't we want to do that? When we do the math, why do we want the math to be exactly what they would charge anybody for the rehab? Why would we want them to actually work out that cost? They won't delay work, okay? That's true. What else? To freeze out, yep. We want to freeze out our numbers, yep. Good, Rodrigo, good. Yep. One of the big reasons is, what if something goes wrong and they can't complete the job? What do you have to do? You have to get another contractor to come in and finish the job, yes? So you will want your numbers to change because you created fictional numbers to make the numbers work, for both of you. So you want the numbers to be as accurate as possible. Does that make sense to everybody? So we want to pay them at the end, and we want them to get paid the real rate. We want them to get paid their real rate. Now, the other dilemma is, if you say I'm going to pay you a real rate, we have to put a cap on that. We have to put a cap on that. The reason we got to put a cap on that is because if we just say, whatever cost it costs, if they overrun, you can't have that eating up into your profit. Okay? So you want to pay them. So an example would be, just an example, you have to run the numbers. You get 25% of the profit, they get 75% of the profit. Okay? Now the reason you get 25, they get 75 is a couple things. They get paid at the end, and they're taking on the cost of reno. Okay? Now that can be broken up into two pieces. We can pay, actual pay or split or whatever. We can pay for materials at cost. Okay? Materials. Or they can pay for all of it, all the materials, all the renos, and they get paid for that at the end. What you don't want to do is you don't want this relationship, of 25-75 and profit getting out of whack. There has to be, a cap or limit on it. Okay? And you could technically say to them, look, I ran the numbers on the deal. You take care of the rentals, you're going to get 75% of the profit on this deal. You could do that. And that could be everything at cost. Does everybody get that? So everything's at cost, right? Everything's at cost. We're covering it, right? And you're going to get 75% of the profit. So on a $100,000 profit, they would get $75K, and you would get $25K. But how much money do you have in the deal? How much money do you have in the deal? Don't we buy the house? Yeah. Devin, you're buying the property, right? Or an investor or whatever it is. You're still buying the property, right? So just to give you an example, folks, if you put up 20% on a property, right? We put up 20% on a property, that would be against the return on investment would be against the 25K that we made, okay? You got to recognize that you're still getting the 20% back. Does everybody understand that? Because you're flipping the property. It's not something you're holding in this situation or case. So beyond the down payment, do you have any other money in the property? Well, you do, Devin. You have carrying costs, right? Which has to be also assessed, right? There's still taxes. There's interest. So your carrying costs on that property might be a couple $1,000, a month, or $2,000 or $3,000, depending on it. But you're not paying. The big thing with this relationship is you're not paying for the reno. Okay, you don't need the capital for the reno. Does that make sense? So if you're getting the mortgage and you're putting up the money for the down payment, he comes in or she comes in, fixes the property, no cost to that. They're eating that cost. Right? And the math, when we do the math, everything's at cost. There's no cost of materials. Everything's at cost. So the cost of the rehab for you is zero, and the calculation is based on the cost minus the profit. They get a bigger share of the profit because they would have made money on that deal. You need them to make money, right? And they got to make money on the deal that's over and above what they would have made otherwise. Does that make sense to everybody? So 50% of this might be the rental. Right? They might 50 grand might be the rental, and they're going to make 25,000. This is just an example. But does everybody see how you could develop a relationship with the rehabber, that would make sense for both parties? Does that make sense to everybody? It really comes down to numbers, and I want everyone to understand that. There's no question it comes down to numbers. But the idea is to get somebody to come in, and they become like an investor, but they're a special investor because they know how to rehab properties. So you want them to benefit from that relationship over and above what they would have gotten if they just got the job, right? You want to give them over and above. If it makes sense financially for both parties, which I'm sure you can make it work in a profitable property, instead of them coming in and doing the reno for $50,000, you might decide to bring them in for the reno and give them a share of the profits to avoid the cost of you putting up the money. Because if you don't have to put up that money, this opens up more opportunities than you would have had otherwise. Does that make sense to everybody? If we share the material cost 50-50 split, yeah, you could do that too. Nicola, you could do that. Yeah, I mean, there's 100 ways to do this, right? What I want you to do this week is I want you to see if you can talk to someone in the game of renovations, a rehabber. and talk to them about becoming, that you're getting into real estate, you're looking at rehabbers. Can you tell me a little bit about what you charge, any costs, what kind of stuff you can do? And then at the end of that conversation, say, hey, are you open to yourself being an investor? Like, would you invest in properties? Is this something that you would do? If we could work out an arrangement where that's something be interesting to you. So you're interviewing him, or just asking some questions to see if he can be a rehabber on your team, and then ask him, would he be interested in investing? Does that make sense to everybody? Okay, can everybody make a phone call or two on that this week? Can you do that for next week? Just one or two calls, and we'll see what happens. Yeah, a lot of them want to be investors. And then we can talk about other people on our team that we want to get involved in the business. Does that make sense to everybody? Let's do the rehabbers this week, but just make a couple phone calls, see how it goes, and then we'll regroup on next Wednesday's call and see how it went. And then we'll answer some questions, okay? So that's the goal this week, is to call one or two rehabbers, okay? Okay, folks, I'm going to wrap up the meeting. Any questions before we go? We good? Type in yes or Y if you're good. Okay, commit to yourself, folks. Commit to yourself to make a couple phone calls this week. Regardless of the outcome, make 2 phone calls this week, okay? Just 2. Okay? Commit to doing that, okay? And we'll see you all next week. Good night, everybody. Thanks for coming. And this video will be up tomorrow on YouTube. At our station, okay? At our station. At our